Hey, what's going on, everybody? It is Tuesday, September 12th. Down day in the markets. Yesterday, there was a 16 billion net drain. So that kind of explains today's down day. Tomorrow, we'll get a Social Security payment. So it's reasonable to expect a little bit of a bounce tomorrow. But we're heading into that Friday tax drain, and once that hits, we'll see a pretty extended period of, I guess you call it defensive price action in the market, bearish price action. I spelled it out for you. I said this is seasonally a weak time of the year because of that tax drain, and it runs all the way into mid-November. Then we'll have a pickup with a quarterly interest payment, and that'll, give us a bounce into like mid-December when we have another tax drain, and that'll last till about close to the last week of the year, and then into January it's positive. Today, I saw you got to pay attention to what's going on with the end of the fiscal year, which comes at the end of this month, and Congress. I mean, they're really itching. The hardliners in the GOP in the House are really itching for a government shutdown. Now, a government shutdown, I told you guys, that would complicate the situation insofar as the fiscal flows are concerned. I don't think it would be a major hit to the fiscal flows because, like I said, we got the 5 pillars of flows. That's, Medicare, Medicaid, Social Security, interest payments, and defense. I mean, all those things are non-discretionary with the exception of defense, but, Congress always treats that like a non-discretionary item. Whenever the Pentagon needs money, that is right away, bipartisan agreement, signed, sealed, delivered. It doesn't matter how much. It doesn't matter if it's for Ukraine. It doesn't matter if it's for a $15 billion aircraft carrier. The money is always there. So you got to I think we got to keep an eye on that, that situation at the end of the fiscal year and we're not going to get a budget. You know that. All we tend to see in recent history has been continuing resolutions where they just keep the government funded for like a month or 2 months, and then they got to go back and do another one, and then they do another one and another one. So we'll see what's going to happen there. But I still say that if there's a shutdown, particularly now when we're going to have the negative impact from the tax drain and what we've already seen in terms of a slowing in some of these fiscal flows, then that's just going to be an added negative that is going to be unwelcome for the markets. But that hasn't happened yet. I'm just saying, keep that on the back burner, keep that on the radar screen, because we got to start paying attention to how that's going to flesh out and what the outcome is going to be for that. Other than that, when you go into these drain periods, typically that impacts risk assets, of course, stocks in that category. You're going to see gold, you're going to see the metals come down, you're even going to see oil come down. As a matter of fact, I just saw the API, and this has nothing to do with the fiscal flows, but the API inventory came out a little while ago, and there was an unexpected build in crude. It wasn't a lot, it was about 1.2 million barrels, but the expectation was for another draw. We've had a series of draws, and I think I mentioned to you that the year-over-year surplus in crude is gone. Tomorrow we'll get the EIA weekly petroleum status report, and we'll see what that looks like. But I mentioned the fact that oil producers, in the last CFTC commitments of traders report, they were net sellers. They're still long, net long futures, but they were net sellers, and I suspect that they're selling up here at these higher levels because they were selling a little bit lower. That's how they tend to do it. They scale into positions like that. I mean, I this goes back to my days as a NYMEX trader and a NYMEX broker on the floor. I used to fill orders for a major oil company, and they would give me orders on a scale down or a scale up basis, and so that's how they like to do it. So I'd be selling into the oil rally right now. Not that the longer term still looks bullish to me, just like the longer term for commodities and metals looks bullish for me. Just like stocks, I've been saying this, the overarching, right? The big picture looks bullish. So I don't get too excited about this. Like if you want to look at it from a trading perspective, from a short-term trading perspective, maybe you want to take advantage of that. I don't encourage that. I'm just saying, I've been giving you these two-tier analyses. But what I like to do, like I said yesterday, is when you get these corrections, think about asset accumulation. Asset accumulation. That's how you get wealth building. So that's what I like to do. I mean, I like when these corrections happen. This is very interesting to me because I see the mass of people out there, how they react to these corrections. Oh my God, it's the end of the world. It's not. It's a great, great opportunity. Every time, what do they put up there? Oh, the death cross. I mean, I don't know. I've been doing this a long time, folks. I've been doing this over 40 years. Like, if you just bought every time you hear or read about the death cross, I mean, you'd probably be on the freaking, list of the richest people on the Forbes billionaire list. I mean, it's just like such nonsense and such idiocy. Like, it's really, really unbelievable. But it's fascinating to watch behavior, and the behavior is constantly this kind of self-sabotaging thing. Somebody asked me a question today. One of my subscribers asked me, and this is a question I get very often because it had to do with an email I sent out about, who was it? David Rosenberg. He is the head of the Carlyle Group. I think that's the name of his firm. It's a hedge fund. He's based out of Washington, D.C., and he has some show on TV where he interviews people. And, he's a really wealthy guy because of a hedge fund. And again, I've talked about these hedge fund people most of the time. I mean, their real skill, if you want to call it that, is money raising. Because if you're managing $10 billion and you're getting a 2% management fee, that's $200 million a year. Plus, even if you make a 1% return, and now you can make 5% just by parking it in a T-bill. But even if you made a 1% return on 10 million, what's that? That's another 100 million, and then you take 20% of that, that's another 20 million. So right there you got like 220 million. It doesn't take long. In 5 years you're a billionaire, okay? And you did nothing, basically. You just collected a management fee, and you collected a percentage of the profits on very, very lousy results. And I'm saying that not because I have some gripes. I'm just saying that because that's true. I mean, if you look at hedge fund returns compared to the market averages, they're way below. So this guy, he was talking about how the deficit is going to reach 2 trillion this year. It could. It's like 1.6, 1.7 trillion right now. But again, these guys always put that out there like it's some terrible, horrible thing, right? Oh, the deficit. And it just, to me, it shows like they're really, really clueless because they don't understand that, number one, the deficit is merely a transfer to the non-government. I mean, if the government runs a deficit, that equates to an addition to the financial balances of the non-government. That's us. That's the economy globally. So like if the deficit is 2 trillion, by definition, that means 2 trillion has been added to the financial balances of the non-government. That's a good thing, right? I mean, That's wealth, all else equal. The other thing that they don't seem to understand is that the deficit of the government, particularly like a sovereign currency issuing government like the United States, where all of its liabilities are denominated in its own currency, a deficit is inconsequential to the ability of the government to function or do anything for that matter. Inconsequential. Okay? So, I mean, there's consequences if if the deficit runs up too high and you don't have the real assets for that money to consume or invest in. Yeah, that's a problem. But we're not there. I mean, we came through a period of inflation. Maybe we still have some inflation because you got sanctions on this because of this war in Ukraine that Biden put on. You had the whole COVID, which shut down supply chains globally. A lot of this stuff, some of it is dissipating, like the COVID-related supply issues, but some of it's still there, like the global sanctions, where the United States is weaponizing basically global commerce because the dollar is still the main basis for it. But so the question my friend and my subscriber asked me is like, don't you think these guys, they really know, but they don't say that because they got some ulterior motive or an agenda behind that? And I say no, they really don't know. And I say that with evidence because it's a story I've told here many, many times, that when I was at Fox News back in the day, I met a lot of these people. The one story I've repeated so many times was my run-in with David Stockman, who was the former budget director for Ronald Reagan. Ronald Reagan ended up firing him. David Stockman, he's a deficit hawk and this and that. And one day he came into Fox, and I was talking to him, and it was a time when I don't know, I think the Fed was cutting interest rates or something. Anyway, he was saying like, this is crazy. The Chinese are never going to lend us money. The Japanese are never going to lend us money. The interest rates are going to blow through the roof. They're going to skyrocket because our creditors are never. I said, David, it's the Fed that sets interest rates. It's not, it has nothing to do with our creditors. The Fed is the monopolist rate setter, and it could set the rate anywhere it wants along the term structure, and it could maintain that rate. He's like, no, the Chinese. So he goes in and he does his segment with Neil Cavuto, and then he leaves. And then like a few months later, he came back, and I was there again. And I think it was at a time when the Fed was cutting rates or something like that. And then he says to me, I can't believe this Fed. They're cutting rates. Nobody's going to lend us any money. And I said to him, last time you were here, you said the Fed had nothing to do with it. Now you're saying they're the ones who are setting the rates. Like, make up your mind. So the moral of the story is, the reason why I'm saying I know for a fact that they don't know what they're talking about, that they're deep, deep, deep into their orthodoxy, and they're blind to everything else by design, because, just let me explain, like the reason I know is because they contradict themselves. And if you're a person, Machiavellian, who has some, strategy of subversion that you want to propagate, but you really know deep down inside, you're not going to contradict yourself. It's so easy to call you out on that. You're going to have your story very slick and very supportive of your subversion, okay? And you're going to be ironclad sticking to that story. You're not going to be contradicting yourself 1 month to the next or one day to the next. But that's what these guys do, and that's why I know that they're totally fucking clueless. The other thing I was going to say is that all of these people, they're in the category, I guess you would call them the elites, right? They're the elites. They hang out with other, with peers. Their own peers are the same, very wealthy, high placed, maybe in policy, maybe on Wall Street, whatever, in the corporate sector. And to speak against the orthodoxy, to speak against the established belief system, would have you excommunicated. You'd be banned from the club. And none of them want to be banned because that's a very cushy, comfortable place to be in. You're the elites. You know, the doors are open for you in every aspect. And for your progeny, for your kids, everything, the doors are... So they're not going to speak out against that. They're gonna toe the line 100%. And this is a dangerous, dangerous thing because these are the people who are running the show. These are the people who are running the show. Anyway, that's it for today, folks. And hope you had a great day, and I'll see you tomorrow. Bye.